Hello, welcome to Market Proof. I am Dan Francis, the CEO and co-owner of StepStone Realty. We are a real estate brokerage just like any other real estate brokerage, except that we specialize in sponsoring investors who have their license, just like our great agent over here, Veronica Pritchett, and her husband, Will Pritchett, are joining me today. One of my favorite two people on the team in our brokerage. They just got an amazing story. They have specialized in the Brrrr method, but have branched out into being experts in private money, all sorts of different things. So I'm so excited. I think they're going to be great and give you great valuable information today. So I'm just going to let them introduce themselves. So Will, Veronica, thanks for coming.
Thank you, Dan.
Thanks for having us, Dan. Yeah, this is great. It's super exciting. Our story started, we just coincidentally, personally dated in high school, went our separate ways for like 13 years, found each other again, and had careers. We had, Veronica was an assistant principal at a large high school. I was a firefighter, and we're climbing the ranks in our careers. Veronica moved here at the age of 8 from Mexico with her family and not much else. They kind of had to start over and sought the American dream. I find their story to be really inspiring. And so starting from next to nothing. And then I grew up in a kind of middle-class family of academics, and business and entrepreneurship wasn't a real focus. Money wasn't a topic that we discussed much. Learned a ton from my family and had a lot of support, but not in the field of personal finance or money. And so together we started by turning my bachelor pad into a rental property just to try it, to experiment. And we liked it. And it was way better than everyone had told us it would be. We started to save up money, bought another one. Veronica got her license, joined StepStone after trying some other brokerages. And the rest is kind of history. But to current, I've been able to retire. She's been able to retire. We were both retired by the age of 43, and real estate made that happen, planting these seeds that have grown for us. So we're grateful to real estate. We're grateful to StepStone for the network and the support that it's offered for us. And I really especially like that I'm not an agent, but StepStone treats me as an equal partner here in our partnership. And so it's been really instrumental in our growth. So that's where we are today. Buy and hold real estate is how we live, and we continue to buy real estate in this market.
And you mostly buy those through a method we call Brrrr, right? Veronica, can you tell us a little bit? Can you define Brrrr and just explain what that
Sure.
means and how you've been able to acquire so many properties?
Sure, Dan. So we love the Brrrr strategy. I always say it's like an extended family member because it helped us we get to where we're at today. So it stands for buy, rehab, rent, refinance, repeat. So it was a great strategy. When we started very traditional with the 20% down. We just didn't know any better. We thought we'd buy one house a year just to supplement retirement. We both had careers that we were enjoying. But then we fell in love. We thought, oh, let's repeat this, but this is taking forever. And through education and podcasts and books, we learned about the Brrrr strategy, and we were able to just implement it. And so what that helped us do is we no longer had to put 20% down on a investment loan. We were able to buy these properties with zero capital. And as a firefighter and an educator, we didn't have a whole lot of capital. Will was working overtime to try to save to buy real estate. So the Brrrr strategy helped us scale and buy multiple properties in a year, and then essentially turn it into a business. And then we're like, oh, wow, like we could really ramp this up. And then because I had left my job, we were about maybe 6 doors in when I was able to exit my job. And it wasn't enough to replace my salary, but we really wanted that flexibility. So we just buckled down and lived off of Will's salary. But we quickly realized if we continued to add doors to our portfolio, then Will could essentially retire early. And so here we are.
That's fantastic. So you mostly through cash flow, is that, kind of supplemented your income or replaced your income? That's awesome. Yeah.
Yeah, I think the surprising thing with rentals is we were really looking at the cash flow as the goal, and it did provide cash flow, but it takes a lot of rentals to live off of, a few $100s a month per. But what really was life-changing was the wealth creation. As we know, the appreciation we've seen over these last few years has been crazy. So, creating equity to buy these properties essentially through sweat equity or finding good deals and learning how to stabilize them, and then letting time just work on them. And time makes mediocre deals look like home runs in retrospect. You know, at the time we thought, these are okay deals, but time just makes real estate better. And that was sort of our premise getting into this. We looked back at property, you know, we had owned earlier in our lives and thought, oh, well, what if we still had that? We heard so many people say, what if I still own that? And we didn't want to be we want to be on the opposite end of that and say, we still do own that and ride that wave. And it's been a good decision.
Awesome. So that appreciation's been great. We see a shift in the market right now, right? And how do you think that's going to affect your business moving forward?
You want to start with this one?
Sure. I'm super excited. Of course, the market has changed, but it's actually been a good thing for us and where we're at now. I was getting a little concerned, even though the properties were appreciating drastically. It affected our bottom line as far as cash flow, right? Because the property taxes were increasing, the insurance was increasing, squeezing out the cash flow. And as far as the San Antonio market, we felt that the San Antonio medium income level was not going to be able to keep up or sustain that. The rents were not going to be able to keep up with the property value increases. So I was getting a little concerned about that. So I'm really thankful that this has happened and it's slowed down because we are seeing it already with our mortgages. Our escrows have gone down for the properties that are escrowed. That's going down. So I'm glad. I feel like it was needed. You know, we needed to stabilize the market. It was just not sustainable, the rate we were going. And I do see opportunity in the horizon. So when we started buying real estate, people kept telling us, oh, you're buying at the top of the market. You know, it's going to crash. And I'm so glad we didn't listen. You know, so what we've learned from that is that you cannot time the market. There's always deals to be made. There's always opportunity. It's just we have to learn to pivot and change. And I think those are the people that end up coming ahead. I love listening to people that have been doing this much longer than we have, and they're still excited about real estate. So I think it's a proven thing, you know. So, no, I think it's a really, really exciting time.
Yeah, so essentially what you're saying is when things are hot and appreciating, you could take advantage of that equity gain in your properties. Sure. You can cash out sometimes, to supplement income. But when things flatten out, then we can give time for rents to kind of catch up with the increased tax bill that we have, increase that cash flow over time. What about your opportunity to find deals? I mean,
I think deal finding has gotten better lately. I mean, I think we're finding better deals. It's a little harder to cash flow because in that changing market you're talking about, the biggest thing that affects us is interest rates. And when interest rates go up, it affects cash flow and affordability. Makes the Brrrr deals harder to do and leave no money in them. So we're coming to terms with we're going to leave a little money in these deals. And that's okay. It's still a lot better. We're leaving less money than we would the old-fashioned way, putting those down payments. So overcoming the interest rate shift has been the bigger challenge than the market shift. The market, I feel like I'm seeing better deals available now, and we get most of our deals through our network or through wholesaling or wholesalers. So the interest rate probably, to me, is the biggest change that will affect us going forward.
Tell me a little bit more about that, the networking that you guys do, because I know you really don't market to sellers directly.
No. We don't, and I think, John from Prime Homes, who have been friends of ours through our network, they encouraged us to networking early on, and we've taken that seriously, and our marketing budget's been next to zero for these 10 years we've been doing this. We've really treated this as a business, I'd say, for about 5 years, but our deal flow, our money, our private money, has come through networking. A lot of it through StepStone, in fact, being asked to speak at events, being able to be around other investor-minded agents. We've found people there that would support us. And so that's been our marketing has been networking. During COVID, it dropped off. Everything was virtual, and it was just we really missed it. We're loving that we're getting back in person. And we try to encourage everybody that we're trying to help along the path to get out there in person, rub shoulders, meet people that can support you. And they all exist. If it's not through StepStone, then through one of your local RIAs or a meetup group, but get out there in person. There's nothing like it to building relationships.
Sir, I think we both have experienced, what networking events are today versus what they were prior to COVID. It still seems like there's a resistance to get out there and network. I wish I could explain it. I don't know if you have any explanation for that or thoughts about that or speculation about that. What is keeping people from just getting back to the kind of networking that we saw prior to COVID?
I think it's interesting, right? Because I think, that we see that a lot. I don't know if people maybe feel a little discouraged or they think, oh, well, I'll wait till the market changes. They're maybe trying to time the market. Maybe it's habits. People got out of the habit. But I firmly believe there's opportunity every single day. All you have to do is show up is the very first thing, is show up and then learn to identify opportunity and then just learn to be willing to take action on that opportunity. But I really believe there's opportunity every day, but it's not going to come knocking at your door. You have to go and show up and then be able to identify that opportunity. And so I think we're going to see more. It's networking, but I also think that the market got so hot that I think now we're going to see a lot of competitors kind of fall off, and therefore increasing opportunity for the ones that are willing to stick it out and stay. So I think for the ones that are willing to show up at the networking, they're the ones that are going to get the deals, right? They're the ones that are going to learn something new that they can go and apply in their business. So I think it's, it's just about, I think you're halfway there if you just show up.
and I think, we felt out of place. I would encourage people, if you don't think you know the language or you feel out of place or you don't know how to, the terminology, show up anyway. Like Veronica said, we would show up and we didn't know what loan to value, LTV was, or ARV, or any of the acronyms, and it just felt like another language. It was intimidating. Show up, and the most surprising thing to me was the growth mindset that most of the people in these networks have. If they're showing up to share what they've learned. It's not a hoarding of information. It's not a competition. It's collaboration, and there's a abundance mindset. There's plenty of houses, and I often use the analogy that when you fly out of a city, you look down the rooftops and you remember how many houses, how many opportunities there are. So there were terms we didn't know. The financial independence, retire early. We didn't know people could retire at 43 until we started showing up at these events and heard people talk about it, and it planted a little seed. And so I would encourage people to get out of your comfort zone. I think life is a lot of it is about getting out of your comfort zone. And if that's what's keeping anyone from going to networking events, try to overcome that and get out there and start talking about what you're doing.
Yeah, I tell people all the time, if you just show up, you don't even have to say anything.
Mm-hmm.
If you're there every single month, you're there every single time, it gets easier and easier. And just being there, I can just tell you from our perspective as, the leaders of StepStone Realty, the people who show up consistently to the events that we put on, if we get some sort of lead or we have a referral, we're going to call the people in that we remember, that we see, that we know, that we've met. You can't get that online. Just showing up, somebody's going to remember you and call you when something comes up. Do you have any advice or tips for going to a networking meeting? Like, do you have an agenda or a plan when you go there, or is there, for a lot of people, including myself, sometimes it's hard to get into a group and maybe break the ice or get involved in a conversation and you kind of just sticking to yourself. What advice do you have just while going to these meetings?
That's a really good question. Go ahead.
Yeah, I think it's interesting because this is something that's a lot easier for Will than me. So I'll give the advice. Will's super social, extroverted, loves to go and socialize. It's a little bit more challenging for me. I kind of stick to the same people and it doesn't come as natural to me. But I've learned that you have to, if you really want to grow, growth happens when you're uncomfortable, right? So I really feel that you just have to get comfortable with being uncomfortable, and be willing to put yourself out there. I will say that the people that have experienced success, those people are so eager to share. It's like, I know, I always thought people didn't want to share their secrets, right? That's made them successful. And that's the opposite that I have found. It's super collaborative, like Will said. So I would encourage people, just even if it's uncomfortable, go ask questions and don't be afraid about the question that you ask. Just go ask anyway. But I also think that you have to know why you're there. You have to know the reason why you're there to begin with to get the best information possible. So, for example, we have 2 kids. And so going to a networking event, that means time away from our family. And the whole reason we're in this, right, is to spend time with our family. So we really want to make the most out of the time we're there. We don't, so that, I think that's it. Just go in there with the mindset of like, this is what I want to get out of this. Know what you want, and then know who you want to connect with. Like, make it maybe a goal. Like, I'm going to meet one new person today. That's what I tell myself, because I'll talk to the same person all night.
As an extrovert, I've been accused of being able to talk to a lamppost. But a few tips for starting conversations when if you are an introvert and you don't know even where to start, is ask someone about themselves. People love to talk about themselves, and just say something like, "What's your interest in real estate?" Oh, and then if you don't know what to say, could you tell me more about that? I'm not familiar. And then also maybe have a little elevator pitch. Well, one turning point for me was at a meetup. They had an elevator pitch competition. And I thought, I'm spending a night away from my wife and kids. I was by myself that night. If I'm going to be here, I'm going to make it worth my while. So I raised my hand and just came up with something. And from that point on, I realized people now thought, Will, that's that guy that buys rental property. And from that point on, I made a point to let people know what I did. And to talk, and not to talk to the same people. It's really easy to get comfortable, particularly if you go with a spouse. We know each other is comfortable, but to get out of your comfort zone, meet somebody new. Try to meet somebody new each time. But some conversation starters. Ask them about themselves and their interest in real estate, and that can kind of get the momentum going, I think.
Awesome. Shifting gears a little bit, I know you all have been very successful at raising private money, and I gave a class yesterday, and I said, and I told my class what I think is absolutely true, which, and it sounds a little bit, midnight Carlton Sheets commercially to say you don't need money to buy real estate.
Right.
But the fact is that's true. But you do need to know how to acquire money to buy real estate. And and I know you've had success doing that through private money lenders. Can you tell us, just give a brief synopsis of that, what you guys have been doing, how you've been able to acquire that money?
Yeah, private money has been critical to our business. We never used hard money. We're not against it, but we never had to, because private money's kind of found us. We talk with enthusiasm about this stuff, and we're talking at church with our friends, and they're like, hey, we'd kind of like to get involved in something like that. And we'd heard of private money, so we're like, okay, let's go figure this out. And we realized that there were attorneys and title companies that handled all the technical work. You didn't really have to know every document. But what they were doing is they were taking a chance on us, but that chance was backed by collateral, which was valuable real estate. And once that started to click and we did the first loan, we paid off those lenders, and they said, go do that again. And our mindset shifted from being somebody that's saying, begging or being in a inferior position, asking for something, to offering something. Dan, I'm offering you 10% interest if you want to loan me, and it's collateralized by something worth more than you're loaning me. And it starts to look pretty clear that this is a pretty safe collateralized investment with a great return. So I think that's kind of the synopsis of how private money has worked for us, and that's come from people's savings, and it's come from retirement accounts. You had some good ideas, I think, on why people will invest with somebody as far as the taking action.
Oh, wow. What a great idea. I don't know what you're talking about.
Well, you were talking about how you have to take action to...
yes. You need to build a resume. So even if the first deals, you don't find private money for the first... because we didn't use private money till the fourth property maybe. And that was because we didn't know about private money to begin with. But having that experience that we had... helped us. So maybe that first private money deal, maybe it's only 50%, right? And then from there you prove it. So now you've gained credibility, and now that lender wants to loan again. Now it's the full purchase price. Then it's purchase price plus repairs. And so I think it just gets a lot easier, just like anything else, build momentum. So, but I think you have to build credibility. And I think the best way to build credibility is by taking action, and having those deals. And then just, of course, following through, saying what you said you were going to do.
Right. I think a lot like networking, for people, the obstacle of finding private money is just they don't know how to present that, how to start that conversation with somebody, or they assume that that person doesn't have any money, that they don't know anybody with money, which I know is not true.
Right.
It may be hidden in their retirement accounts, or maybe they're not flashy, but everybody knows people with money.
Right.
And so how's can they get started? What can they say? How does that conversation start? Or what's a way that they can kind of present that?
Yeah, I love this topic. I think that everybody that's listening to this has in their network of associations through social media, you have enough money to fund all of your deals for the rest of your life. I believe that. So you have to begin by letting people know what you do. From the lending side, I heard someone the other day said, nobody wants to borrow money. I said, well, who knows does anyone know you're lending money? Well, no. Well, unless someone knows what you're doing, they can't contribute. They can't help you, even if they want to. So you have to let people know what you're doing. I think social media is like this modern day resume. It's this free marketing to put out information about what we're doing. So what if you said twice a week I'm going to post something educational, not give me something educational about real estate that builds your credibility. Maybe you went to a conference. Maybe you read a book. Maybe you read an article, and you're sharing it with people just as a giving goodwill, giving free education, sharing something that was meaningful. You start to build your credibility that way. So that's one tip, is use social media to your advantage and let people in your friends and family network know what you're doing. When you're at the yacht club or the golf club or the church, talk about what you do in your business. And with enthusiasm, so that people get excited with you, want to support what you're doing, get on board with what you're doing. Maybe you teach somebody about loaning from a retirement account. There's trillions of dollars in retirement accounts in America that are untapped. If you take an hour today to learn about self-directed IRAs, now you're a little bit more of an expert than your neighbor, and you mentioned self-directed IRAs in conversation, and did you know you can loan from a self-directed IRA? You might teach someone that they can be a lender that didn't even think they could be a lender. They may have zero in their bank account, but they've got $300,000 in an old retirement account, and they would love to get a better return and be out of this volatile stock market. So teaching people about lending from self-directed IRAs and retirement accounts is a huge opportunity to tap into just unlimited money. And then one caution is, don't think you know who has money and who doesn't, and don't judge them by what they drive or what they don't. If you've ever read The Millionaire Next Door, it's a great book about just middle-class Americans that have $1 million of net worth or more. They're everywhere, all around you. But we joke at our events that we go to is sometimes the more homeless somebody looks, the more wealthy they are. And that we're trying to earn the right to wear more tattered clothes and look like we care a little bit less, because it's almost like this inverse relationship. So don't ever pigeonhole the guy in the Ferrari that he has money, and don't think that you know who does. I've borrowed from people in our blue-collar work. Firefighters are my lenders. Teachers have been our lenders. Attorneys have been our lenders. People in all walks of life that have some money set aside that they want to invest, collateralized with real estate. They like real estate. They like HGTV, but they're not going to go swing the hammers. They're not going to go find the deals. But this is their exposure to it. So
I would like to add, too, that borrower and lender is kind of a, people don't realize that they can lend. They think that of course you borrow from a bank. Is this even legal? But I think if you frame it as a partnership, right? Because that's really what it is. They're a money partner. They're a debt partner. So maybe you go out and hustle and get the deal, and you need a money partner. So you go and ask someone if they want to partner with you on this deal. Well, now it's a business. Now it's a partner. So it's a little less, it kind of takes out that stigma of that borrower lender. It makes it a little more, this is a business deal. This is a business partnership. And then you just structure it, as a debt partner.
I think that's a great idea.
Yeah,
Great
I like
point.
that. Just a story along that lines. When I first started in real estate investing myself back in 2003, went to a meetup, a group. It was the only one in town at the time in Austin, called the Rink, the Real Estate Networking Club. There's only about 20 people there every month. Not a large community of investors back at the time. But there was always this guy, and I thought, who is this guy? There's no way this guy could be involved in investing. He looked tattered and worn, and like he literally just walked in off the street. And it took me about 4 times to find out that he was the biggest hard money lender in town.
Wow.
Yeah. So yeah, you
So
cannot
true.
judge
No.
the lenders by their cover, right?
When I show up to one of the StepStone events in flip flops and cargo shorts, you'll know I have arrived.
You've arrived. You've made it. Everybody, we asking Will for money.
Yeah.
I'm sorry, giving Will the opportunity to partner.
That's
I'm just
right.
kidding.
Exactly. Yes.
And just to kind of run on with that idea, it's funny, but because we paid good interest rates to friends, we saw the benefit, and so now we lend from our retirement accounts, right? I'm looking, and here's a great post idea if you've never done this. Look back like yesterday or whenever this is aired. I'm sure you can look back at within the last week and see a down day in the market. Take a screenshot of that and put it on your social media and say, did you know that you could loan, on real estate? Use that as your alternatives are this stock market that's up and down and red and green or something really stable. And so that's a good conversation starter. And then you see who gives you a thumbs up or a heart or, makes a comment. Oh, they might be interested. And you start the conversation.
That's a great idea. Well, I'm going to end it there, but I can't thank you guys enough for coming out. How can people follow you, learn more from you? Because I think you guys have a lot to offer.
Well, thanks. Yeah, we try to teach as often as we can with StepStone. We're always at the networking events, so come out to those, the annual conferences, everything that we try to be as present as possible in person now that we can be in person again, and we encourage everyone else to do the same. It's just so much better in person. Teaching's better in person. Networking is better in person. But we're on social media, Home Again Prop. Will and Veronica Pritchett have our own Facebook's probably where we're most active. And we just try to share what we've learned. You can reach out to us if you want to be on our mailing list for our blog and stuff. We don't really sell anything, but we like sharing because we feel like we've solved a puzzle sort of. And when you find something that's really good that changes your life, I joke that it's like we're CrossFitters or vegans. We just don't have the cool socks and I'm way fatter, but you can't get a CrossFitter and not talk about it. That's how we are with real estate. Like it worked for us. It changed our life. It changed the trajectory. And I get to pick my daughter up at 3:19 every day from the school bus. That's life-changing to me. So that's what the why was. That was, why I did this. So I guess I would just encourage you to get out there and we want to share these things. And the best way we share them right now is Facebook, I would say, and our blog. So reach out to us. We're just sharing what we learned along the way. Got nothing to sell. But this stuff's life-changing.
So if I wanted to sign up for your blog, is there a specific place I can go or to do that?
I think the best way is probably just to DM me on Facebook and just say, hey, I'd like to be added. Send me your email address. That's probably the simplest way right now. We're changing our website around and stuff. So then I can add you to our mailing list. But main thing is just to get out there and do it. Get active, take action, and lean on people that can help you. Like, we're happy to help anybody that we can.
Awesome. Thank you guys so
Thank
much.
you.
Yeah,
Thank you,
you. This has been Market Proof. If you want to learn more about us or follow our podcast consistently, please go to stepstonetexas.com. You can hear more about StepStone. You can learn about our CE classes. We do tons of both live and online CE classes. Follow us on Facebook, Instagram, TikTok, any of those, and we will see you next time.